Semiconductor stocks are getting a lot of attention lately because of how they help facilitate the growth of artificial intelligence. Many of the most popular AI companies like NVIDIA and AMD use these companies that I'm going to highlight in this video to help facilitate manufacturing and growing their business without actually owning the manufacturing themselves. With that being said, which one is the best semiconductor manufacturing stock to buy? Is it Intel? Is it Micron? Is it Taiwan Semiconductor Manufacturing Company or ASML? I'm going to answer that question in this video by comparing these four companies across several important financial metrics. And I'm also going to share with you my proprietary discounted cash flow valuation models for these four companies, which highlights and calculates a fair value of their stock prices today. I'll also share with you another valuation metric, the forward price to earnings ratio, to look at valuation more comprehensively. I'll do all that and then answer which one I think is the best one to buy in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I wanted to start by comparing these four on revenue growth going all the way back to 2014. In the purple here, you have Taiwan Semiconductor Manufacturing, and you can see the phenomenal growth in revenue in this company, increasing revenues from 24 billion in 2014 all the way up to 116 billion in the most recent trailing 12-month period. Taiwan Semiconductor boasts Apple, NVIDIA, AMD, and Tesla as some of its most biggest companies that hire it to serve its manufacturing supply. Intel, meanwhile, is going in the opposite direction, with revenue falling from 55.9 billion to 53.1 billion. Intel is losing considerable market share in the data centers optimized for artificial intelligence. Previous generation data centers use CPUs as the main component. In the current generation, it's accelerated GPUs that are the main component. Additionally, AMD is gaining market share, and others are also gaining market share at the expense of Intel in that category. Intel is also under pressure from companies like Qualcomm making inroads in the personal computing industry. So Intel trying to get itself back, trying to get itself onto better footing. The CEO was recently forced out because of his plans being considered as too ambitious, too much capital expenditures without enough return on that investment. Intel's foundry business, which it recently started, is not attracting any big name customers with large quantity purchase agreements. And most famously, this morning, actually, there was an announcement that Samsung won a huge $13 billion contract to manufacture Tesla's AI chips. That was a category that Intel was or could have been making bids because Tesla looks like was looking for a US based manufacturer. Samsung will be manufacturing those chips that were contracted with Tesla in the United States as companies are trying to lower the impact of tariffs, lower the risks of having their supply chain outside of the United States. Micron, meanwhile, has demonstrated solid revenue growth up from 16.4 billion close to 35 billion in the most recent trailing 12-month period. Micron, too, like Intel, is making significant investments in expanding manufacturing, expanding the quality of manufacturing and the quantity it can supply. It's boasting some of the best order rates of any of these companies as its components are working alongside NVIDIA's components inside data centers optimized for AI. What's more, Micron benefiting from an increase in the uh, computing power that's going into smartphones and laptops and desktop computers. They're looking to add more storage and more memory in these devices to help facilitate the calculations that are required with artificial intelligence. All of that working to help growth. ASML, last but not least, has increased its revenue from 7 billion all the way up to 38 billion in that time, for the highest compounded annual growth rate of these four companies at 17.3%. ASML provides the machines that are used by Intel, Micron, and Taiwan Semiconductor Manufacturing Company, and Samsung, and others. So they are, in my opinion, and I like to say, the very beginning of the supply chain in artificial intelligence and in manufacturing these semiconductors. The next metric I wanted to compare these four on is the returns on invested capital. And looking at these, you can see Taiwan Semiconductor having the healthiest and most consistent rate from 27% all the way up to 33% in the previous decade, with its number falling at the most to 18.4% and remaining above those levels throughout the entire decade. Next is ASML, which has demonstrated an improving return on invested capital from 15.4% up to 24.3%. And given that ASML has industry leading technologies with competition arguably at least one step behind, probably two steps behind, I feel ASML has the best pricing power of these four companies, which should help the company continue expanding its ROIC going forward. Intel again moving in the wrong direction, falling from 15% down to negative 4%, as the company has invested tens of billions of dollars in its new manufacturing capacity and expansion and improvement, and it has yet to see the returns from that investment. So it's still in the investing stages. Estimates suggest that starting in 2027 is when Intel will really start to see the fruits of those investments that it's been making for the past 4 to 6 years. Micron, meanwhile, very volatile and significantly cyclical in its business, where its ROIC jumped to 48% in 2018 before falling to negative 10% in 2023, before rising to 11% again most recently. Micron said that most of its investments are starting to bear fruit now. The company's latest technology is well received, and I expect its ROIC will continue improving here as this semiconductor cycle is in the early stages of improvement. Now let's look at valuation, and let's start with my proprietary discounted cash flow valuation model. For Intel, I calculated a fair value of this stock at $31. The current market price is $21. So I see this business as being undervalued at current market prices, although I see Intel as the riskiest of these four companies I'm talking about here because of the big question mark surrounding the turnaround story and the big question mark about how the CEO, the incoming CEO, can change and facilitate some improvement in this business. Micron is the next one here. I calculated a fair value of this stock at $130. Current market price is $111. So I see this stock as being undervalued as well. ASML, I calculated an intrinsic value of $687. Current market price is $730. I see ASML stock as being fairly valued at the current market prices, not undervalued like the others. But I see ASML as the best quality investment out of these four in terms of competitive advantages. It has, as I mentioned, the most pricing power and the best ability to sustain its competitive advantage in the long run, given the sources of its competitive advantage. And last but not least, Taiwan Semiconductor Manufacturing Company, I calculated a fair value at $154. The current market price is $242. So I see Taiwan Semiconductor as being overvalued at the current market prices. Now, I also like to look at valuation using the forward price to earnings ratio, and my preferred data source is fiscal.ai, where you've seen me sharing with you all of the cool charts they have. You can find the link in my description, and you get a discount for using my link. Looking at these, the forward price to earnings ratio, the cheapest company here is Micron at a forward PE of 9.86. Next, Taiwan Semiconductor at a forward PE of 19, ASML at a forward PE of 27, and Intel boasts a forward PE of 99. because of how much Intel invested in those manufacturing expansions and how the depreciation expense and the fixed operating expenses are weighing on the company's profitability until revenue starts to catch up to those investments the company made. Overall, for me, I think it's a close decision here between ASML and Micron Technology. Those would be the two I would rank at the highest here, followed by Intel because of the valuation when measuring on my proprietary DCF. Taiwan Semiconductor I see as being overvalued here at the current market prices when measuring by my DCF calculation, and that would be I would say almost close, very close to Intel, but would be fourth place here. So if I had to pick one of these four companies to buy today, I would say it would be ASML as my best stock to buy right now from these, followed by Micron in a very close second place. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.